Well, hi there and welcome to the ISC FX Options Weekly Outlook for March 14th, 2011. As always, this is Jason Ayers of OptionsSource.net, reminding you to sign up for your free workshop at www.optionsource.net. Let's start off with a look at a weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, the dollar index bounced off of the 76 level as expected, but closed the week off of the highs. We are yet to see any evidence of a change in the downtrend, and a break of 76 should signal a continuation lower. A reversal and break back above 77 signals a possible test of the 78-79 focal zone. Let's take a quick look at a daily snapshot. The daily chart clearly reflects the resistance level at 77, with last Friday's close suggesting a possible retest of 76. Next up, the CDD, the U.S. versus the Canadian dollar. Well, the CDD continues to hold above the 96 level, suggesting a solid support at this focal zone. However, after a quick test of 98 as resistance and a failure to hold above 97.5, we are open to the possibility of a test of the lows from last week. A break and a close above 97.5 should lend credibility to a move higher. Let's take a look at the YUK, the U.S. versus the Japanese yen. Well, the YUK continues to consolidate sideways, forming an indecisive sideways triangle. Now, we saw a significant drop on Friday, and a failure to break back above 82.5 opens the window for a continuation to the downside. Let's take a look at the EUI, the U.S. dollar versus the euro. Well, the EUI retraced moderately early last week, but closed the week with a bearish reversal at the 72-73 resistance level. Now, this suggests the possibility of an extended move lower towards the 70-71 focal zone. A break above 73 opens the window for a move towards the 74-75 resistance level. However, until that takes place, the trend remains to the downside. Let's take a look at the U.S. versus the British pound, as seen here in the ISC FX Options pair value BPX. Well, the BPX is showing signs of support at the 61.5-62 focal zone, closing last week with a test of the resistance at 62.5. Now, Friday's reversal candle lends credibility to a retracement down to test 62 as support. Let's take a look at the AUX, the U.S. versus the Australian dollar. Well, the AUX gave back all of its ground last Friday, closing back down in the 98-99 focal zone. This level should hold as support. However, the 100-101 focal zone needs to be overcome to lend any credibility to a reversal of the downtrend. A break below 98 opens the window for a continuation down towards 96. Let's take a look at a few of our key points. First of all, the U.S. dollar index bounced at 76 as expected. Although we saw a break above 77, the index closed the week below this resistance level. The trend remains down. The CDD broke 97.5 but closed the week below this resistance level. This lends credibility to a move towards 96. We are still looking for a break and a close above 97.5 to support a reversal in the downtrend. The YUK has been coiling into a sideways triangle reflecting indecision. Although we saw a significant drop on Friday, we are seeing the lower trend line being tested, suggesting the possibility of a bounce this week. The EUI dipped lower early on in the week, but reversed back up into the 72-73 focal zone. Friday's negative reversal bar lends credibility to a move down towards 70 and a continuation of the current downtrend. The BPX broke above 62 and held, but closed the week with a negative reversal bar. We need to see a break above 62.5, 63 focal zone, which should hold as support to lend credibility to a bigger picture reversal of the current downtrend. The AUX hit resistance at the 100-101 focal zone as expected. Friday's reversal bar suggests a continuation to the downside for the AUX. And this has been your ISC FX Options Weekly Outlook for March 14th, 2011. As always, this is Jason Ayers of OptionsSource.net, reminding you to sign up for your free webinar at www.optionsource.net. Thanks for joining me here this week. We'll see you here next week.